Take a look at what's happening and unfolding in Saudi Arabia. Do you feel like the market's accurately priced for the risk we might be seeing?
No, Alex, it's great to hear from you again, but with the price falling back 6 to 7% today, it was up, I think, 10 to 11% after the incident. So we've only gained about 3%. So the market is not putting any security premium on the price of oil at all, especially in 2020. It's only up probably 50 cents to $1.
So, Scott, why? I mean, when you have the reassuring headlines coming out of the Saudi Aramco conference, okay, maybe, but why do you feel like we're not seeing the premium baked in, and what should it be?
Yeah, no, that question is a big $64 question, but people before this incident thought that the Permian Basin could supply all the world's shale needs and crude needs. But as you know, the Permian Basin, the rig activity is down about 13%. It's all because of a lot of people are drilling parent-child relationship wells, down spacing. And secondly, this free cash flow model that investors are wanting, they're wanting more and more cash back to the investors.
So that's a good point, which means that I can infer that you're not adding or upping your spending at all on the news of the attack over the weekend?
No, we're not increasing at all 2019 budgets, and we're not increasing anything we've already said about 2020. It'll just be more free cash flow that will come on the balance sheet, that more is available to our shareholder base.
Can you give me some perspective as to how high prices would have to go for how long, as if we learn this outage is actually worse than 3 weeks, that you would have to start changing the way you're thinking about your CapEx?
I think the price would have to get up so high, maybe, up in the $80, $90 range and stay there for several months, that at some point in time, I think all the shale plays may need to add some production, but we can't do it that quick, and I don't think we can add that much. And so there's really no place that can add a million or 2 million barrels a day inside the U.S.
So why can't you do it quickly? Because the story, the narrative is that, oh, shale, you can quickly turn it on, you can quickly turn it off. What's going to hold you back from being able to meet any supply gap if we wind up seeing a big one?
Yeah, if you get past the investor's view of what they want, then you got to look at the infrastructure in West Texas, the lack of personnel. Right now, it's still, even though with activity down 14%, it's just almost impossible to get the people, the infrastructure to work that fast in a short period of time.
Do you feel like your peers are going to be as disciplined as Pioneer?
Definitely all the public peers, the private equity peers. I believe so when talking to many of the private equity companies. A lot of people still have too much debt. So a lot of the first few dollars coming back to the independent sector, both private equity and public independents, will improve the balance sheets. And then after that, some will start increasing dividends, and some will continue their buyback programs.
Scott, do you see hedging coming back? The industry is woefully underhedged, really, for this year and next year. Does that change now?
Probably somewhat, but since the 2020 price for the calendar year, it really hasn't jumped up. So I think people will wait to see if U.S. and Saudi takes action against the Iranians, assuming they can confirm that the drones and the missiles came from Iran. I think people are going to wait to see what happens, and also to see if the repairs are what Aramco talked about this morning. And so are they going to get back almost full production within a 3 to 4 week time frame?